This is our Forex blog for May 16th, 2012. I'm working on some automated systems and signals, and so I didn't leave the software running overnight, so I'm using our FX Trend Pro currency meter versus the range-based one, which only works live, as you can see. So this statistically compares every currency to every other one. This is using 5-minute data instead of the range bars, and it combines 5 of our best tools. 3 of them measure the direction. In this case, the dollar's moving versus all the rest, and the other 2 measure the intensity of direction. So we average it together into one indicator, which is basically the real-time trend. The dollar's trends up, the daily's trends up, the weekly and the monthly is all up. And basically you want to buy the dollar versus some of the weaker ones. The weekly and monthly is down in the euro, but it was experiencing strength today. The New Zealand's weak on all time frames and pretty much was weak until about 6:30 to about 8:30, and then some weakness came in. The pound had the most weakness today. The daily trend shifted extremely down at 5:30, but the weekly and monthly trend's up. So you don't know when that happens. You never know if that trend, this is the beginning of a new downtrend, or if later in the day you're going to see it reverse with some extreme strength coming in. And for the most part, anytime you see it hit 100, that's extremely weak. It's likely to be weak for a couple hours. So at 5:30, what was the strongest of the currencies? The dollar got strong right here. It had a little bit of weakness right before that. Really, the Australian had the least amount of weakness before that, coming up to 5:30, and the most intensity. Its daily trend shifted, its weekly trend shifted. It still has a monthly trend that's down, but one of the higher odds ones at 5:30 was the Australian. Strong Australian, a weak pound, which means you want to sell the pound Australian. Here's the chart of this pound Australian after 5:30 to this big drop. You look for a little pullback, you get short, pullback, short, nice sideways rectangle pattern right here. Basically, there's only 2 entries we look for: sideways rectangle patterns and also pullback trades. And anytime you get short when it breaks this sideways rectangle pattern, draw your fibs off the last little wave down. And it gives you a good Fibonacci profit target areas to get out of the trade at. In this case, you'd be short right around 36 and getting out somewhere between 12 and the whole number down here. So very nice, big profit. You put your stop. I would put my stop right over these bars high right here versus the high of the rectangle pattern. And if you really believe the trend was going down, because it was one of the highest odds trades, you might have actually jumped the gun and gotten short somewhere around 46 with your stop right above the high. A lot of times I get in it after only a 20 or 30 minute sideways range, get short, and if I get stopped out, I'll usually, if it breaks the lowest low, get in again with a little bit bigger position to make sure I get the loss back. Usually the second trade works. Now, every time the currencies like the yen and the dollar are showing some weakness, later near the U.S. session, if the weekly and monthly trend's up again, you never know if it's a reversal or just it's going to be 1 or 3 hours of weakness and then strength comes back, like you saw here with the yen. But at that time, the Australian was one of the strongest ones. So one of the things that you can do is use our new signals, which we should release probably mid to late next week. And I'm going to give you an example. The Australian was strong. The daily and weekly trend shifted. The yen was one of the weakest ones at 6:30. So you basically are looking for buy signals in the Australian yen because the yen was weaker than the dollar for the most part. You can see how strong the daily, weekly, monthly trend is of the dollar. It's a little bit less strong with the yen. So always, if the real-time weakness is more and the strength of the longer time frame trends is a little bit less than the other one, pick the ones that the odds are higher in your favor. So we want to buy the Australian yen from 6:30. So keep in mind that the Australian yen is extremely weak in the weekly and monthly trend, and most of these signals are looking at longer-term trends and looking for patterns that are likely to lead to trades in the direction of the most likely trend. As you can see, most of the signals, with the exception of a few, were quite profitable. 6:30 comes around, and all of a sudden the Australian gets relatively strong and the yen gets super weak. Anytime a currency goes from underneath to above its hourly moving average, usually it's a pretty decent place to get long, especially when it breaks out through the high here. These counter trend signals, because of how weak it is on the weekly monthly trend, it's underneath its weekly pivots, underneath its monthly pivot. These signals are basically designed to give you possible reversals. If there's no resistance area right there, it's not as much likely to work. It's probably much more likely to reverse up here at the previous day's high. And so these signals that are generated mainly because of the longer term trend, if a signal doesn't lead to a counter trend trade, because this does not use our currency meter to know how strong or weak the real-time trend is. It's just looking for chart patterns. Because of that, if you see a signal here that's false, when it breaks out, it's very high probability, and it is likely to work its way to the next fib target up here. And then you got a nice little pullback right here, which went up about 10 pips. This trade right here, you would have lost 8 pips. Bought it again down there. It went up about 15 pips, and then another pullback right here. Keep in mind that the monthly trend is extremely weak. The weekly trend was weak all day until about 7:30, and it always helps to use your fibs in designing entry areas. Usually the 38 to 50% fib area is a much safer place. This pullback right here is nowhere near even a 38% fib. Getting in near the 38% is much higher odds. So if you had, kind of got into your trade lightly here, comes down again, add to your position, you would have made money on that trade. You could skip trades that are a little bit lower odds and higher risk. Keep in mind the previous day's high is your likely profit target. So if you buy right here at 04, your profit target's at 15. It's only 11 pips away. The farther away you are from the resistance area, the better that your odds are. Most of the range bar patterns that I've come up with look at the longer term trend and try to find signals in the direction of the longer term trend. If in the real time the New Zealand's showing a lot of strength and the dollar's showing a lot of weakness, you don't want to be going against the real time momentum. But when all the time frames of the New Zealand are down and the dollar and the yen for the most part are up, you can use our signals on range charts to find high probability trades selling the New Zealand dollar and New Zealand yen. Here's a good example of that. Obviously, this was a very weak currency. It comes up, it's underneath the previous day's low. You get a sell signal right here, and you can see the market falls off about 40 pips. You can be aware of the counter trend signals, and these only show up because the market's so far down. It doesn't mean the market can't continue. I'd rather know of a possible reversal area. If you see the real-time statistical momentum kind of run out of steam, you can get out of your trades. But most of the time, and it's very hard to programmatically code up Fibonacci areas. Most of the time the markets come down to these fib areas. So if you see a ton of buy signals and it's near a lower 3.0 green band, which is usually the end of the move, and it hits a fib target and there's a buy signal right here, this is one of those things where you can load the boat on the counter trend move and you can see it ride it up 30 pips. The farther up it goes, the more likely a sell signal is to be profitable. And you can see this one, fell down another 20 pips. We have another counter trend signal right here, and usually once you receive an extreme, if the market pulls back 50 or 62%, usually that's going to be the end of the move. So you can see that it basically pulled right back to the 62 and went a little bit underneath it. As soon as it comes back in this range, that's a pretty safe buy here. And anytime you don't make a lower low than before, that's oftentimes an end of the trend. You're better off waiting for it to get near a resistance area, which is the hourly moving average, previous day's low right here, and such. And one of the new signals I put in there, if a currency's weakness is this much, and you have a 3-bar pullback right here, that closes above the previous day's low and then comes back down, it gives a sell signal. So let me add that one to the chart so you can see that one showing up. What I'm doing, and one of the reasons I'm waiting to release this, is to try to put in some of our real-time tools that will get rid of a lot of the false signals. As you can see, that gives a sell signal right here. Because it is so weak on the weekly and monthly trend, this is a very high probability reversal signal. 3 bars up in reversal, right near a major resistance area like the previous day's low. Very high probability. And this one's also pretty high probability. Anytime you have 5+ bars down with a bar that goes up like this, if you have a wick going up and then it closing down, usually that momentum is going to continue. This is an excellent reversal area. I would only take these trades when there's enough room to run. So the lower band is down here at 39. If you're short this at 56, you have the chance to make 17 pips. It's worth risking 7 or 8 pips to make 16 pips. Anytime your likely profit target's twice as much as your risk, you take the trade. Now this trade right here, it's right near the lower band. It's already looks like it's formed a low. If you get short right here, it might go down to this lower band here at 29. You would be shorting this at 36. That's only 7 pips away. So these are just kind of right now suggestions on trades to take based on where it is in the range, and also learning some of our other methods like Elliott two-wave fib system. Anytime you have a big extreme move down like this, it's likely to have a two-wave move up, and usually it goes to the Fibonacci profit target levels. So these cells right here, here, and here, very high probability when combined with other things that we teach in our classes. If you're watching 12 of the best and most actively traded currencies, a lot of times you don't spot these patterns in real time. You might be looking at something else and all of a sudden see the New Zealand dollar with a sell signal right here on your chart. And you say, well, it's had enough of a pullback up. It may also be near a Fibonacci level of the entire drop. And that's anytime 2 Fibonacci areas touch, it's called a Fibonacci cluster. And that's a very high probability place for a reversal. So you can see the 38% retracement of the entire move down is right here. It's also right near the 1.618. So these are very high probability places to get into a trade. Previous day's low is a major resistance area. When coming up to it from underneath, you have major resistance, very huge sell orders likely at 76.90, 76.91, and then also the whole numbers right there, which, by the way, is right near our upper containment bands. Upper containment bands, when you have a weekly trend that's down this much and a monthly trend and a daily trend, if it gets up to these upper bands, usually it ends the up move and then it comes crashing down again. So getting short at very high probability, likely reversal areas, or even within 5 or 10 pips of it, is a very high probability place to sell. This is a much higher, 3 to 5 times higher probability trade than this, which, it really hasn't retraced that much. I like to sell weak currencies after they've gone up at least 15 to 25 pips. This isn't enough for me. However, if you use our real-time momentum, and the New Zealand was the weakest of all and the dollar was the strongest of all at this time, then you might consider it. But at 6:30, remember the dollar really was quite weak at that time, and it had previous weakness before that. So if you were trading it against one of the stronger ones, you would not have. You could have taken a trade right near the low, but because the dollar was weak, it wasn't really likely to work right here. And so these signals, keep in mind that when we finally release this in about 2 weeks, they're going to have quite a few of our live tools in it that should get rid of some of the signals. But some of them, it's very hard not to, I don't want people to possibly miss trades, or if, let's say, you got into a counter trend trade right here, you might want to get out of your trade right here and pick up 10, 15 pips because of how weak this is. These signals are based on longer term trends, and getting just 10 pips a day doubles your account every 2 months. So if you do a counter trend trade right here and get out, you have a nice profit. And one of the things that I've been doing with this with my own trading, I've been taking quite a few of these signals. Rarely in my own trading do I have more than 2 losses in a row. So if I have 2 losses in a row, the next trade I might do 50% more loss. And then on the next trade, if I lose that one 2, 3 in a row, that almost never happens to me personally. This is an area right here where I might do 2 times. So for illustrative purposes, let's say I take 1 lot here and lose 10 pips. We have a 5 pips per bar range chart on here, and I usually put my stop a pip or 2 above there. So my loss really would be about 8 pips. So that's $80 loss. So what if I do 1.5 lots here and lose 8 more pips? That's $120 loss. So I'm down 200. Now, if I get short up here with 2 lots, and it's short right here at 81, and it pulls back, and the real-time trend is telling me maybe I want to get out of this thing and make 10 pips. 10 pips with 2 lots is $200. I'm at the even. So if I go back and trade 1 lot right here and maybe make 5 pips, make 50, get short again 1 lot right here, and this one just takes off and I make 30 pips. Guess what? I'm up 300 pips on that. Got my loss back on 1 trade that it took me 2 trades to get into. Small win here, and you're up on the day. And so by using these signals and buying and selling them near support resistance and or when they have good distance to run. This is enough of a pullback up. It's a two-wave counter trend move in a very weak trend. You're much more likely to get a 25-30 pip move than you are trying to sell it right near the lows. I don't like to chase currencies by selling them at their lows. You know, this is a pretty decent trade earlier because it rallied from the low here at 47 all the way up here to 74. That's a 25 pip plus counter trend move, which gives me a potential of making 20-25 pips if it returns to the lows. A lot of times the double bottoms are the end of the move. So keep that in mind when you're trading and looking at these patterns when we release them. One other thing that we're going to do that's going to revolutionize our software is range charts. A lot of our tools on range charts only work live, not these signals, but other ones, and especially the real-time statistical momentum. If you have a hot list up and you sort it from strongest to weakest, and you attach that to our range charts, when they move around, it orders the data again. You lose all your live data. One of the things we're working on is coming up with blank chart placeholders that can then be linked up to these range charts where we have a bunch of live, real-time only indicators on them. Not this one here, but other ones that you've seen. For example, here's the euro dollar. As you can see, when I brought this up, this real-time momentum is showing up here live. Now, if I right-clicked on here, set hot list group option, if I link this to green, which is the same color as our hot list, and then set this to A, I could have a blank chart also set to A and set into the first place position. And this chart would automatically get moved over top of that blank chart and letting you see and use our range charts. And that way, basically, if you have a two-monitor system, you can always be watching the strongest currencies on one window for buy signals and the weakest currencies on another one for sell signals, making it a lot easier to trade and take the right signals. You're kind of ignoring the signals on all the other charts that you're not looking at the moment. And that way you're always focusing on the highest odds currencies.